But we have feel that, and we have also, unless the BPCL, HPCL start buying quantity in the large, you know that how many cylinders population today? It's a 500 million, 50 crore cylinders are in population. And every year government need how much? They need almost 5 crore cylinders. And against that, what is the capacity of us and Supreme? Less than 5% even, I can say. What is this capacity? Nothing.
Right.
So it is going to be happen. I remember very well. You go back, we are in the polymer drums, right? You go back to 25 years back. Entire market, 30 years back, entire market was controlled by the steel drum. And leader was the Bowman Lorry Vendier, is a government company. You see now, 30 years, 60% conversion has taken place now. 60%. So it is going to be happen slowly. And we are going to see at least sustainability when the BPCL, HPCL, IOCL and some of the private gas distribution company also take the interest and use these LPG cylinder. And then we will talk about the expansion. We are not considering in our revenue growth of 15% this LPG cylinder any expansion. Yes, we are happy with 90% utilization. Let us first people restarted using and recurring customers should come back. Because it's a one time and you one again. 2 years back the price difference between the metal cylinder and composite cylinder was more than 30%. Today it is reduced to almost around 15%. As the volume will increase, we can also offer you very, very competitive prices of this. Yeah?
Got it, sir. Thank you for the perspective and detailed answer. One final bookkeeping question. So in the last call, we had given a guidance of FY25 interest cost to be around 70 crores. And that is how we see it right now, right?
I think you are right, because we revised also after audited results. Yesterday night, all team were here only. And after audited result, we revisit our revenue of 2025 and interest working. You are on that line only. I think the right figure you have.
Thank you so much, sir. All the best for the coming financial year. Thank you.
Yeah.
Thank you. The next question is on the line of Abhijit Purohit from Kaviraj Securities Private Limited. Please go ahead.
Yeah, hi sir. Thank you so much for the opportunity.
Hi, Abhijit.
Firstly, congratulations on really strong set of numbers. I just have one major question. The approval that we received from PESO for manufacturing high pressure type 4 composite cylinders, and this is for prototype hydrogen side. So I just wanted to understand and just wanted to know how much revenue potential, incremental revenue potential we have from this approval, and can you just throw some light and explain?
Abhijit, it is too early to say about that. I mentioned to you, hydrogen cylinder requirement is depending on the hydrogen gas plant, which is again, as you know that currently CNG using in the vehicle. Future you will see hydrogen using because the capacity will be more. But yes, we are the first company who got this approval, and as you mentioned the approval, this is the prototype approval. We made some samples to get the approval. Now we will do one lot of the production capacity. There are many, as I understand from my technical team, almost 30-40 tests are required. So almost 75% tests have been completed. Balance is in process. It's a time testing process. So we'll come to know final approval in the next 2 months' time. Then we will find out, we will meet to the company's requirement. But yes, everywhere green energy you are hearing, every company is working on green energy, every company is working on the hydrogen. So we will have an advantage definitely, but the commercialization, estimated revenue, which you have mentioned to Mr. Rashid, just I have told them, in revenue guidance of 25, we have not factored anything. Just we are keeping ourselves ready to capture the market and the first mover advantage. That is our objective.
All right, sir. Just wanted to understand, in Q4, we saw a slight dip in our EBITDA margins of established products. So is there any specific reason, or it's just a momentary?
No, I think I have also worked out because some other person has also asked me yesterday night. But you know that last quarter always you will find some kind of the annual provision and certain kind of the, I can say the voluntary retirement, settlement, we have done some of the labor at the unit. So there is hardly the employee cost is incremental of 3 to 4 crores. Otherwise, there is no normal. There is a 10-20 basis point is there. Other things we have seen that 11 crores non-recurring profit is also there. But as I mentioned always in my call, the variance in the EBITDA margin will be up to 50 basis point, because whenever price increase, exchange fluctuation, it takes time to pass on with the gap of 25 to 30 days. You will not find any much variance in the period. And yes, we ourselves are keeping target EBITDA margin in the range of 13.5 to 15.5. We are keeping the range depending on the established product mix and the value-added product mix. Especially in the last quarter, you are asking me, you know, the PE pipe business, which is again we supply to the EPC contractors, certain government guidelines, completion of the project, etc., where the EBITDA margin is in the range of 10 to 11.5%, so volume is more there. Therefore, it may affect to 10 to 20 basis points. Otherwise, there is no any other reason for downsizing the EBITDA. Utilization is okay, supply is okay, and all product segment is okay.
All right, sir. Thank you so much. That was it from my side, and all the very best for the upcoming endeavors.
Yeah, thank you.
Thank you. The next question is from the line of Rahul Dhruv from Pegasus Growth. Please go ahead.
Yeah, hi. Congratulations on the great numbers. Just wanted to check on a couple of things. One is on the LPG cylinder contract that we have currently. When does it end, and how much of that revenue is there? Let's assume if we don't have any further contracts from HPCL and BPCL, what would be the impact on revenue?
I tell you, you know that elections are ongoing there. Previous contract is over now. We and other partners have supplied that. New contract is already in process. Everything is finalized. But I will able to, being a listed company and quantity, I will able to let you know in the next 15 or 20 days time, because already finalized, and I will announce when I will get order in hand. But yes, process is on because of some government election process, and it's the government companies, so it may take 10-15 days more.
Okay.
But yes,
but in order
my export is continue. Supply is on.
In order to maintain continuity, the oil company have also extended the last tender, so that the supply does not get disrupted.
Yeah.
But ballpark, how much was the number in FY24? It's around 200 crores, right?
Both put together, I think that last tender was about 1.5 million cylinders, right?
Right. No, but I'm talking about revenue for last year.
Yeah, revenue last year I mentioned that in the LPG cylinder revenue was 210 crores.
Right. Okay. So if there is no continuation, that is an impact that we can potentially have.
No, there will not be any impact, because what happens, certain time because the government, you know, their supply, always there is if you don't supply into time, they charge the delay charges and everything. So what we do is, we do the timely supply, and wherever the available capacity is there, we take the export order also and taking care of those other countries. We balance both way, depending on the timely delivery schedule of each of the customer. You know that nowadays, because of the Red Sea problem, we have to transit period is increased for export to the other countries. So we are keeping that in mind, and accordingly we are exporting to the overseas customer.
Okay, great. And sir, my next question was on the development of TBS, transparent container batteries and e-rickshaw batteries. Can you tell me exactly what NED Energy is doing? I mean, are they just making the containers? What are they really trying to, what is the product that is finally going to come out?
I just give you the history. If you know, I don't know because how many calls you attended that. You know, NED Energy is a subsidiary, 97% subsidiary of Time Technoplast Ltd, where company has invested 65 crores, and both the companies put together revenue in the range of 125 crores. Potential to go up to 250 crores. One point of time, this company was manufacturing only telecom sector batteries. But COVID period they learned, and we also developed so many other batteries, which include solar batteries, railway signal batteries, industrial batteries, and the telecom sector batteries, now hardly 25 to 30% of business. But yes, we have a technology available, so we thought we are not going for the electrical battery completely. But yes, within the know-how available, we are in process of e-rickshaw batteries especially, because market is very big and this battery is very well accepted. It's a low-cost batteries compared to full size of the batteries, which is lithium-ion-based batteries, electrical batteries, very, very high cost. Because I know that recently I bought one electrical vehicle where the battery cost itself is 1,20,000 rupees. You know that is a very high cost. So we want to develop e-rickshaw batteries with the low cost and low maintenance batteries. So our scientists are very clear. They are developing, and within 6 months they will be ready this. Now, notwithstanding that, you know very well that we have said in various calls, companies made investment 65 crores, and we are more focusing on the composite products. And as we get the good returns on electrical business, this vehicle battery business, we will definitely in the 3 years explore the possibility of the existing from this business, because our focus is very clear on the composite products where the EBITDA margins are higher and the good potential in the period ahead.
Transparent battery will be
and transparent battery, where it is used, I am just telling you, it is in power transmission, power distribution, telecom sites, offshore platforms, and captive power users. Market size is about 200 crores, very big. And you and we know very well, power sector is going to be main in the next 5 years, when India government is forecasting the growth of 8 to 10% and further, and this specifically segment where the power sector is growing 20%. So we thought why we should not develop these batteries. So whenever opportunity arises, company can get that advantage, and that value can be captured when they decide to exit from this business.
Okay. So I had one last question, if I'm okay.
Yeah.
Okay. So, on the, I looked at your EBIT margins, which basically are almost at, 20-quarter high, around 11 plus now, except for the last quarter. So that, if you compare with your gross margins, the gross margins are actually around 250 basis points lower from the previous peak. While your EBIT is, of course, a function of scaling up of the business and economies of scale. So I'm just wondering what happens to gross margins? Can they go back to the 30+% level eventually?
You are talking specifically Q4?
No, I'm talking about overall, quarterly. If you look at the quarterly gross margins, they used to be in the 30 to 31% range at one point in time.
Yes,
and now they are at between 28 and 27 and 28. So I'm just saying, is that something which can potentially change over a period of time?
Yeah, just a minute. In the quarter, you will see the material cost is 71.7% as against 71.9%.
30%, that will be 25, 27, 28% will come out.
That material cost, always I tell you, just a minute. Material cost, I just give you some kind of the information to you. The material which is locally is available, some material I have to import it, imports available. Material cost is composition of import duties, then the import price, etc. So that all depends on the demand-supply gap. Material percentage, sales realizations, everything has gone down because we pass on to the customer, prices and down. So always we talk about the volume growth. We have seen volume growth is 19%, but the revenue growth is around 15% somewhere. So that difference is on account of the prices ups and downs. Material cost, you know that if, for example, today I am selling some product like 100 rupees and I am making a 15% EBITDA, that is 15 rupees, then terms of the percentage will come 15. But if tomorrow 10 rupees down, raw material price is 90 rupees, and again I will make 15 rupees, then the percentage will go to the 16.5. So in absolute figures you will have to see, the EBITDA margin is maintained.
So I fully agree with that. That's not really what I was talking about. I was talking about...
And another percentage-wise, I tell you, as the percentage, we have a variety of the products includes. You have seen that battery products, steel drums, IBC, composite products. In composite products, you will say the raw material inputs are less, but other expenditure are very high. In polymer drums, maybe the raw material cost is 75%, maybe the other cost is less. So it's the combined put together, the range is 71 to 72%.
Okay, so it's a product mix. Okay, thank you very much. I'll come back in the queue.
Yeah, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to two per participant only. The next question is on the line of Priyank Parekh from Abacus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity. Sir, I have only one question on the IBC business. So,
sorry to interrupt, Mr. Parekh. Sir, your audio is not clear. We request you to use the handset mode while speaking and not the speakerphone.
Yeah, sure. Hello?
Yeah, yes.
Yeah, so I have only one question on our IBC business. So, sir, in this quarter, the IBC volume has surged quite substantially. So, any reason for the same?
Let me see that. What is your question? IBC?
IBC business has risen substantially in this quarter.
Yeah, it's okay. I think you were on that, I think before 2%, when somebody has asked me about the composite product business, I have mentioned very one of my subsidiary has put up IBC plant, which is started in the part of the year, in the October only. So you will see in the second half, there is a substantial improvement in the IBC. And in each of the call, I have mentioned very clearly, packaging products, where jerrycans, drums will grow in the range of 20%, but IBC definitely will grow between 15 to 20%, because most of the exports are taking place in IBC, because of the bulk handling, agent handling, mechanical equipments are available. So that's the reason. Yes, because of the new expansion has taken place, and that pace will continue.
Okay, got it.
You go through my, I think, another subsidiary company result, TPL Plastic, you will come to know, because every clarification has been given that in subsidiary.
Yeah, understood, sir.
Yeah.
So, on the continuation of that, so if we see the fourth quarter of FY22, fourth quarter of FY23, and the fourth quarter of this year, so we see a sudden drop in the realization of the IBC. So, any specific reason for the same?
No, it's again, margin is maintained, absolute figure is maintained, it is cost of the price drop and product mix. But especially you are talking the IBC, of course prices has gone down, polymer prices has gone down, so we have to pass on. These are the industrial products. I'll have to see the...
sorry to interrupt, sir. So, in last, if I say, in this year, except this quarter, the IBC realization is around 8,200 per unit. Now that has substantially come down to 6,800.
Oh, no. I again one thing other clarify. I tell you. You see my presentation, we have mentioned very clearly, IBC, you go to my earning presentation, I have mentioned clearly, certain countries where I sell as a complete IBC, okay, number one, which price range from 7,500 to 9,000, country-wise different. But in certain countries, I sell only containers also, because in the world over, in India not yet taken in popularized, but world over, there is we supply the inner container only, not a complete IBC. Therefore, the per IBC rate you can't find from this work. From the rebottlers we provide them. And we have written IBC including inner containers. Because some customer, IBC is a three-part components. One is the inner container, then the cage, and the lower side is the pallets. Three variants are there differently. So you can't get the price. This is the rough estimate have been given that these are the total IBC numbers bottles. Because blow molded items, then one is the complete IBC, then the inner container. That is very difficult to provide country-wise and separate. Yeah. I think you cannot get that rate directly linked to the numbers and the divided by revenue.
Okay, got it.
Yeah.
Yeah, and sir, if I may ask the last question on that front only. The IBC volume we are seeing, so how much is coming from the domestic sale and how much is from export sale?
Almost you will find, what is percentage? 45% India and 55% overseas.
Oh, okay, got it. Yeah, thank you, sir. That's it from my side.
Thank you.
Thank you.
Thank you. The next question is from the line of Akhil Gulecha from Peakaday Family Office. Please go ahead.
Hi, Mr. Bharat. First of all, congratulations on such a great turnaround that you accomplished in the last few years. I'll quickly go through a couple of questions that I have. So first is I wanted to understand the pricing difference in CNG caskets between the caskets that you make versus the caskets that are imported. And because you've grown at 100% year on year for the past couple of years, so why is nobody else putting up a plant in India? Is it quite expensive to put up a plant? Are you seeing any challenges going ahead are you seeing any competition in CNG casket at all in India?
Yes, let me just answer you this query that you have. First, when it comes to the price difference, the price difference between the casket that we offer in the market and the one that is being offered by importing these cylinders and then assembling them here, they are in the region of somewhere between 15 to 18%. So we are in a position to provide that advantage to the buyer. And being a domestic class 1 supplier, as they call it in the government terms, there is an automatic preference coming to us. That's number one. Number two, while we are doing reasonably well in this business, as you would, as an automotive consumer, realize that, the use of the fuel for any vehicle today is still getting rationalized, quarter on quarter or year over year. People are still not very clear as to whether the diesel will get substituted by CNG or whether you will have electrical vehicles or whether there will be a compressed biogas or whether there will be an ethanol. So there the distribution of the gases are getting fractured mandates. But then for sure over a long period of time with the policies the governments have rolled out, we are in a position to see very clearly that CNG will find its rightful place in the entire segment of business. So we are very confident. It might take others to realize it, but even when they realize it, access to this technology is very difficult. There are very few people who manufacture these products globally. We fortunately have been in the composite business for the last 20 years, so we had the good experience of manufacturing these cylinders and we were able to graduate much faster.
Okay, understood. So what you are saying is that as of now you don't see any domestic competition in India and you are fairly confident of great growth in the next few years at least.
Very true, no doubt about it.
Okay, thank you. And the second question is, I know you talked about this earlier as well, but can you just explain why your volume growth is 18%, but your revenue growth is quite lower than that? So how are your contracts structured to your customers? How does that work? Like, because ideally you would expect volume growth plus some inflation price increase.
No. As I mentioned in my last call, you know that 19% volume growth and revenue growth is 16%. 2-3% difference is on account of the pricing difference because the duty structure, exchange rate. It means I'm very clear. Normally when we talk about the growth, we talk 15% growth in terms of the volume because prices again depending on the demand supply. And when we talk about the EBITDA margin within the range from 13.5 to 15.5%, so we talk in the terms of the absolute figure only. So pricing is again, as you know, that polymer prices are depending on the demand supply, not only the oil prices directly linked because some producers are making gas-based oil or something, and we have a different product mix also. But as far as fixed order price is concerned, we have only 2 products or 2 or 3 products where we have an order book. That also, like for example, CNG caskets, LPG, that's all on the fixed price, but we take contingency part in our hand. A contingency we keep always when do the pricing based on our experience of the last year. And when we do the projections also based on the last year realization of the costing, we take the projections for the next year. In HDPE pipe business, normally we have seen we take the fixed price contract almost 50-60%, 40% price variation we allow them. And at the same time, we also book our materials accordingly, by either from imports or locally, so that we can manage that price level within the range. You don't find much of the variance, especially because Indian producers are also parallelly correcting their prices based on the import prices of each of the countries different. So you won't find any of the much difference. But always when we tell you, you see the volume growth is there. Price ups and down, it is depending on the products. You have seen the 70% raw material cost. This may go up down, but you know that 92% of our business is directly B2C end user business, where we have a practice to pass on the price increase or decrease to the customer. Therefore, we are able to maintain our EBITDA margin within the accepted range.
Okay, understood. So what you're saying is that you target 15% volume growth. The revenue growth may be slightly up and down, but it will largely remain within the range. So it is also possible that with 15% volume growth, you end up with 18% revenue growth.
Yes, of course, it's possible. If suppose tomorrow exchange rate become 88 rupees or 86 rupees, price will go up. I will pass on to them.
Okay, understood. Okay, thank you so much, and all the best.
Thank you. The next question is on the line of Ankur Savaria from Equity Investments. Please go ahead.
Good evening, sir. I really congratulate you for a very good set of numbers, and you are walking the talk for last 3-4 years from the time I have been associated with the company. Sir, before the disinvestment talks were there, you had given a guidance of sales of about 4,200 thereabouts in 2 to 3 years down the line. But now, since we are not disinvesting the foreign business, what would be your target for FY25 and 26 for the revenue?
Thank you, but you have seen that in the last call also, one I think disinvestment process is on part of the year, which is hardly 7.5% of our revenue, which is in terms of if I consider a 5,000 crore revenue, 7.5% is 350 crores. And 350 crores also, if you divide 50% selling, it's 125 crores, which is negligible in terms of the disinvestment part. But yes, as I mentioned in last call also, that disinvestment proceeds will be used for the value-added expansion, the repayment of the debt. But yes, you are asking me as a growth party is concerned, I can, as I mentioned to last person also to Ankur, you can consider the volume growth of 15% around, as we have achieved 5,000 crore this year. Exactly, you can take the 15% volume, then it's worked out around 5,700 crores around. And similarly, there will be some EBITDA expansion margin also. You will see 20 to 30 basis point improvement because of the product mix change. And we are considering composite product growth of 30% composite products growth, which includes all value-added products are there. And other products, we are considering growth of 10 to 12%, which the packaging products mainly and other products. As you know, that chemical industry data is also available, that everybody is estimating in the range of 10 to 12% chemical volume growth is accepting. So we are also considering the same way.
Got it, sir. And also, sir, since our capex will be almost over in this financial year, and given the size of our order book, the government policies regarding the natural gases and CNG, doesn't it make sense that since our capex is already covered with the cash in hand and the money that we are going to get from this investment, doesn't it make sense to take a leap of faith and really ramp up our capex for next phase for the Type 4 cylinders, because you have so much demand that you're not being able to fulfill? So why wait for someone else to enter the market? And would it not be better that we really go for a next phase of capex and capture the entire market, both for the car manufacturers and the CNG business?
What is this then? Ankur?
Yes, sir.
Mr. Ankur?
Yes, sir. I'm here.
Yeah. I tell you, you have said right, but I think some things which is not in my hand, because you know that most of the equipments are imported with a time-taking process, and delivery itself is 8 to 10 months time. We have already placed the order. Okay. So now, if demand is there, that's right. But again, you know that the new unit put up, approvals process in India, you know how timings are required. We have already taken this period ahead. Last year only we took the expansion, but that we will complete this